You take a loss, a real one, the kind that stings, and immediately, before you even close the position, you're thinking about the next trade. You want to get it back. You want to recover what just happened. You want to feel like you didn't just waste that capital and your time. And here's what I want you to know. That feeling is your activation level spiking. That's not motivation. That's your nervous system in threat response. And the next trade you take, the one you're desperate to get right, has almost no chance of working out the way you planned. And I'm going to show you why. And more importantly, the protocol that lets you take the next trade from a regulated state instead of a reactive one. When you take a loss, something happens almost instantly. Your brain registers a threat, not just to your capital, to your competence, to your identity as a trader. You took a trade, you followed your plan, and it didn't work. On some level, that's a failure. And your nervous system responds by elevating your activation level. At the same time, your brain is doing math. You know exactly what that loss cost you. You can calculate it to the dollar, and you can think about what you could have done with that money. And that calculation creates urgency, a pressure to fix it, to make it back, to prove to yourself that you can still trade. And that's the trap. Because the activation level that gets triggered after a loss is different from other types of elevated activation levels. It's not fear exactly. It's not panic. It's a specific kind of dysregulation, the need to recover, the compulsion to act. At that AL, your prefrontal cortex, the part of your brain that makes clear decisions, is downregulated. And what's running the show is the part that says, fix this, act now, and make the next trade count. So here's what I see in trader journals consistently. After loss, the next trade has one, a lower win rate. Why? Because traders are entering lower quality setups. They're desperate. They're taking trades they would normally skip. Two, larger position size. Why? Because the loss created urgency. The sizing decision is driven by the need to recover, not by the plan. Three, worse exit discipline. Why? Because the trade is being managed from an elevated activation level. The emotional weight of the previous loss is affecting every decision. And four, lower execution integrity. Why? Because the trade is being managed from an elevated activation level. The emotional weight of the previous loss is affecting every decision. The result? Traders have a 70 to 80% chance of taking another loss in the trade immediately following a real loss. Not because the setups are worse, because the trader is dysregulated. And that creates a cascade. One loss triggers another loss, which triggers another. And suddenly you've gone from a single loss to a catastrophic day. How do you know you're in post-loss dysregulation? The first marker is you're thinking about the previous trade, not analyzing it, not learning from it, thinking about it, replaying it, calculating what you could have done differently. And that rumination is a sign that your AL is elevated. Your brain is stuck in threat response. The second marker, you feel rushed. You feel like you need to move fast. You feel like the market is moving on without you and you need to catch up. And that's not opportunity. That's dysregulation. The third marker, your sizing, is bigger than normal. Or you're looking for a trade when you normally wouldn't be. You're modifying your plan. You're making exceptions. All of those are signs that your nervous system is driving the decision, not your plan. And if any of those sound like you right now, you're in post-loss dysregulation. And the next trade is probably not going to work out. Here's what you do. First, the moment you take a loss, you stop trading. Not for 5 minutes, not until you feel better. You stop for a minimum of 30 minutes. That's the rule, non-negotiable. And during those 30 minutes, your activation level will come down. Not to zero, but meaningfully down. Your nervous system will begin to regulate. No. Second, during those 30 minutes, you do not look at the chart. You do not think about the next trade. You do not calculate what you could have made back. You step away entirely. Your job is not to feel differently. Your job is to interrupt the rumination. Third, when the 30 minutes is up, you journal the loss, not to beat yourself up, to understand it. What was the setup? What was your AL going into the trade? What happened? How did you manage it? What would you do differently? Write it down. This is not optional. This is the moment that you extract learning from the loss instead of just carrying the emotional weight of it. And fourth, after you journal, you look at the market fresh. Is there actually a setup here? Or are you looking because you're dysregulated? Most of the time, when you look from a regulated state, there's nothing. The urgency disappears and you stay out. Fifth, if there is a genuine setup, you take it at your normal size, not bigger, not smaller, normal. Because the decision is being made from a regulated state and your plan applies. 6, you track this trade separately. You note that it came after a loss. You measure your AL at entry. You measure your execution integrity percentage on that trade. And after 30 trades, you'll have data on how well you execute after losses. And that data becomes your accountability system. Here's why this protocol matters. One loss doesn't have to become 2. One loss doesn't have to become a losing day. Most traders think the loss is the problem. The loss is not the problem. The loss is market information. The problem is what happens next. The dysregulated decisions that compound the loss into catastrophe. So if you can interrupt that cascade, if you can take the next trade from a regulated state, then a loss is just a loss. It's data. It's just part of the process. And your edge still works. So for next week, I want you to do this. Every time you take a loss, use the 30-minute protocol. Document it. Write down whether you took another trade or stayed out. Track your activation level and execution integrity percentage. And at the end of the week, you'll see your pattern. I'm also offering a complimentary 1-hour trader performance audit with me over Zoom. In this session, we'll look at your post-loss behavior and build a specific protocol that works for your nervous system. Apply using the link in the description. And drop a comment. What's your worst Cascade story? How many losses in a row before you realized something was wrong? Subscribe, share this with one trader who's been chasing losses, and we'll see you next time.